thank you for joining us. In terms of the numbers, this is good news, not the best news, but it's good news, right?
Yeah, absolutely. I mean, compared to the past, I would say, in the first half of the year, the economy has been slowing down, so the expectation has been quite low. So at least for this month, we got a stabilization. I wouldn't say this is a huge rebound, but at least, numbers stabilized. And it's pretty consistent, right? If you look at the other numbers like exports and CPI, all of this data showed some marginal improvement. So I would take this as positive signs.
Can I ask you, how much seasonality in terms of just the month of August more broadly is there in these numbers? Is there anything that could be suggesting that this is aberrant in terms of, the 0.3% on the retail, the 0.5% on industrial production? Is it an August thing in your mind, or is this just an incremental step-by-step that we are seeing in terms of, the stimulus coming in and we're starting to see the impacts of that?
Yeah, I wouldn't say this, there's not much. I wouldn't say seasonality is a big deal here because, we're looking at year-on-year numbers and a lot of these data points across the board all showed positive signs, right? So, but, there's some weird base effect compared to last year, right? Because last year there was a lot of lockdowns in some of the cities in China, so it's a bit hard to read. But nonetheless, I would say if all this data improved, in this month, including CPI, and the government did a lot in terms of policy easing, particularly in the property market. I would say that the story seems to be pretty consistent. We have a stabilization, I would put it that way, that at least in the economy. Now the question is how sustainable this rebound will be in coming months.
Now, I've got to ask you because, looking through some of even just the FA numbers, right, you've got private sector fixed asset on Jan to Aug off by 0.7%, but it really is on the public side that you are seeing, the infrastructure spend coming through. What's going to flip the script there? Because, you've got a lot of businesses, you need them to spend, you need them to have that credit impulse, you need them to want to, juice that growth that we're looking for. Is it just going to be a matter of they're also, much like international investors are, in wait and see mode to see if the economic conditions improve?
Yeah, absolutely. I think your question is the key, right? So it's the confidence in the private sector that is what we hope that could improve in coming months. I think the focus now for the government is to first, boost confidence in the property market in particular. And if property demand comes up, transaction picks up, there's more property sales, more land sales. Hopefully that would trigger into the demand for other consumer goods, and then the corporate sector can also benefit from that. Now, we're still at the early stage. I would say, a lot of the policy easing measures rolled out in the past months happened in a short period of time, and how big the impact will be, how sustainable the impact will be, we still need to wait probably a couple of months to evaluate. But at least compared to, say, 2-3 months ago, the government policy easing measures are getting rolled out, right? Including yesterday, we got this reserve cut. So the government is moving in the right direction. So I think it will take time, but the economy outlook has become better.